All right, traders, how's it going? Sam here from TradeDevils.com and TradeDevilsIndicators.com. Today, I'm very excited to introduce to you a couple of the new features we've just added into the Trade Devils toolbar. Now, there's a lot going on in the toolbar, and some of you may have heard me say before, of all the indicators that we sell, all the tools and indicators, if I could only pick just one, without hesitation, it would be the TDU toolbar. Everything that we teach, our entire methodology is incorporated in the toolbar. Now, we're going to go through some of that, and of course, I'm not going to go through every single tool that we have available here, but I will, if you're interested in that kind of detail, I have two suggestions for you. One, you can go over to the TradeDevils-Indicators.com site and look through. My partner Erwin has a couple of demo videos over there, some of the tools where he's showing you how they're used. That's one suggestion for you. The other is, of course, you can always do a 5-day trial. Everything that we make available is available to you on a 5-day trial. It's a full working version. By the way, that's 5 trading days, not 5 calendar days. So you can really use these. But again, for my purposes here today, I want to focus on two of the new tools that we've just built in that I think you're going to find are very useful and will assist you in your technical analysis. All right, so before we do that, I got to do just a quick review here, just so we're clear on exactly what these tools are doing. So let me just use the polygon tool here, and I'm just going to draw out the classic measured move here, right? So if any of you have followed any of my teaching or have seen any of my videos, you know that this is, to the day I die, I will tell you that this is the dominant algorithm in the market. That this is all you need to know. The market is in a constant series of swings and extensions, right? It's just all it ever does. Swing, retrace. Now, either that retracement goes external by breaking this pivot, or it goes external by breaking this pivot, right? So it's going to be one or the other, right? So we have a swing and the retracement, right? I mean, we can go sideways for a long time, but eventually one of these two is going to break. If it breaks the lower pivot, often, unless you're at an all-time high, often what that means is it's just going to be part of something larger, right? So the same structure will be there. So let me just kind of back off on that and just kind of go back to where I was, right? So you get the idea here. So when we're looking at a swing and a retracement, right? So if I get a swing here and I get a retracement here, and we go back here to our classic measured move. Well, in the counter trend retracement here, often there'll be some swing structure to that, and as I'm sure you've seen many times, often it will look more like this, right? So if we think about that, now you could think of this in a couple of different ways. So, for example, an Elliottician might look at this and go, "Oh, it's just an ABC, right? That's all we got is an ABC that's just gone in there." Well, if you're a price action trader, you might look at that and say, oh, it's a second entry, right? Al Brooks made those famous, right? It was swing, retrace, swing, right? Market's tried twice to do something, can't do it. If it turns around, you've got a potential long entry here. So no matter how you want to frame it in your mind in terms of what's happening, this is a pattern that repeats every day, thousands of times on every single time frame you can imagine. It's just over and over and over again. And often these can be technical. So while we're, of course, always looking for this kind of retracement here, where we'd come swing and we'd get an internal, perhaps we go to the 50 or the golden zone. We know that's where the algorithms are responsive, and we have a clear set of targets here, first and second target. What I want you to focus on is not just the straight retracement here. What we've done with the new tool is given you the ability to recognize a confluence point between the swing low to swing high, and then also the swing structure that's internal to the retracement, the ABC or the 1, 2, 3, however you want to think of it. So let me, I guess we can. We can leave those on. All right, so what I want to show you here is that if we look inside this swing structure, there's often you'll find that these will have a Fib relationship. So I'm just, again, I'm just free drawing here. So if you look here now, so I've got a swing. I'm taking the length of A, projecting from B, and I'm coming down. There's 100%. So what I have here, so this is as it's touching the golden zone. Now, granted, this is just free drawing here, but we'll take it to the market in a second. But I just want you to understand the idea. So if we come into this pivot point down here, I've got some nice confluence. Right, I've got 100%, I've got an A to B equals C to D kind of a thing. If you want to think of it that way, the length of A projected from B, there's exactly 100%. That's the most common pivot. If it breaks that, next most common would be the 1272, the 138, that little window. And if it's going to go further, maybe the 1618. So we're always looking to try and find as much confluence as we can. So if I can get confluence between the swing low, swing high, and the potential pivot here, and then additionally some confluence based on the swing structure internally, well, now I've got a whole lot more confidence in pulling the trigger at that pivot. Right, so just to give you that little just review here. For many of you, that may be review. So for those of you that are very familiar with this, I apologize, but I want anyone perhaps who's not, new students to TA, they're just getting comfortable with these tools. I want you to understand the theory behind it, and then we'll look at it in practice. So I've just got a 15-minute crude chart here for some of the things that I'm going to focus on today. I like to go larger, 15 minutes and plus, but this will work just perfectly well here. So let me. This will work. Okay, so I'm gonna just draw it so you can see here. If I go swing low, swing high to swing low, we come up here and we tag. We get to the this is the 764 and the 786 little structure here. So we go 61, 618, 764, 786. So this is a common retracement. If you're thinking in terms of an Elliott structure, this is very common. So you can see the potential ABC here, very common for a retracement. If you're thinking with your Elliott wave hat on, that would be a nice B wave structure. But I want to do it with the new tool and show you how we use this. So I've got a swing, I've got a retracement, but inside of it, and I'm sure you can see it, right? We've got a nice little ABC that goes in there, and I want to know what that structure looks like, and if I can combine that target point with a fib structure with a retracement, well, now I'm interested. So I'm going to use our new tool here. It's called the Fibonacci Zigzag Cluster. So I'm going to click that, and then I'm going to do basically just draw the same thing. So I'm going to go swing high to swing low, and I'm going to click. That's going to put the retracements in for me. Now with my mouse, I'm going to go to that swing high, now this swing low, and you'll see that what I end up with here is I've got confluence. So I've got this little confluence pocket here where I know I've got the 786 here is the blue line. I've got the extension. So what we have here, what that extension is, we're taking this length. Oh, here, let's do it this way. So I'm taking this swing right here, and now I'm projecting up. So that would be 1272, the length of this swing projected up. So it's really just an extension. I'm taking this length and I'm projecting up. Now let me show you something, because we're giving you not only the retracement from the swing high to swing low, but we're giving you extensions as well as alternate price projections. Now it just so happens here at this pivot I don't have any alternate price projections, but if this pivot had been lower, right now you can see the alternate price projections come in. So let me put that there. So if we had swung down and the retracement was this deep, so if I were going to be projecting something like this, and I'm just showing you this so you see what we'd be doing here, then that would be the 100, the length of A projected from B would give me the 100 alternate price projection. Now let me take that off and show you that now if this had gone deeper, right, there'd be additional details coming to me, or if this swing went higher. So we're always giving you a series of extensions and alternate price projections, but what the algorithm here is going to do that's built into this tool, it's going to find the closest. In this case, it just happens to be the extension of this swing. We'll look at some other examples. You can see where we'd have it differently. So looking at that, so you see the example here of using the zigzag tool here to say, okay, swing, retrace. So let's just do it again so you follow here. So I'm going to go swing high, swing low. I'm going to click once. That's going to trigger the extensions to pop over there. And now I'm just going to draw the internal swing structure that I'm looking for. And when I click the last one here, now that's going to leave me, essentially what it's giving me here is a hot box of targets, potential pivots. And you'll note here we go in once, go in, and that's what starts the whole thing off. So I think you can see the benefit there of how this could be useful. Now, of course, you could do this manually. You could just do it like this, and then you could say, okay, well, then I'm going to go here, and I'm going to draw this in like this. Oh, I didn't make the 100 here, so now I'm going to do an extension. I'm going to put in an extension. I'm going to use that. You could do it all manually, but it just is inefficient. Right, so what this tool is doing is it's saving you the repetitive task of doing that over and over and over again. right? So your chart just becomes a cluster and you can't see. So what we're doing is eliminating anything that's not relevant. So again, just so you see it, right? Swing low, right? That triggers it. Now I'm going to go to the internal swing structure here, and when I click here, it finalizes it. Okay, here's my potential pivot structure, and in this case, it worked out pretty well. So I think you'll find that that's useful. Let me see if I can find another example in here where we'd have a good ABC. Let me go. Okay, rather than have me hunt and peck, I went back and just kind of looked for what I wanted to show you guys. And it's always you're looking for three. So here's the little ABC formations. So if I were using the tool here, I'd grab this, having recognized that, oh, I suppose we'll just use the most recent swing, and then that would click that. So now I can see I'm at the 38. Now I'm going to take the length of the A, project it from the B, and look what I got there. So I get this nice little confluence zone here, just beyond the 38, but right exactly at the 100%, right? So as you recall, this is the most common target of a classic measured move. Length of A projected from B, 100% is right here. So it's just one more confluence point here to get you more confidence. So you can see here, oh, I've got multiple confluence points here, multiple Fib relationships. I'm interested in that trade. What did you get there? I mean, you're not going to get all of it. There's 181 ticks, right? On the assumption you got a piece of that, so not bad. Okay, so let me pull that off here, and we'll keep moving here. I'm going to go back to where we were because this is a fairly nice example of some of the other tools that I want to show you. So we looked at the longer example here, where if we were using that, just to review, we'd have this here, we'd lock in, then we'd go here to here. Now that's our pivot point here. But what you can see there's essentially, this is just a very large A, B, C. That's all we're doing here. It's just ABC. Now this has come back so far here. It's most likely this is a corrective wave. So we've got that in place, and I would be looking at a couple of things down here. Well, of course, you'd be curious about the length of A projected from B. So we could just go to the traditional tool here that's inherent and built in with Ninja, so I can see we're coming right to the 1618, the length of the A from the B. So I know I've got something technical there. So a couple of things that I might do here. I'm going to pull this off here, having established that. So if I were analyzing this, and I'm interested in the possibility here that I've got a pivot here, well, there's all sorts of things I can do with our toolbar. So one of the first things that I would do is use our geometry tool here. This is the auto range, and all what this is going to do is draw the geometry for me automatically. Again, you could do these individually, but this is going to do it for me by default. All right, so what it's going to do is it's going to take the three swing structure, and what you'll note here is A, B, and I come down here. So again, if you've seen any of my video trainings, this is a classic corner pocket trade here. We know that if this pivot holds per much of the work that Dr. Andrews did 60, 70 years ago, we know that once we get a pivot here, the probability of making the median line is 80%. Right, so there's your 80% straight down. Right, so this would be an interesting trade. Now, if you start putting these things together, now let's see if I can kind of combine it. Right, so here's this pivot here, and I'm going to go here, and I'm going to go here. Okay, so now I've got a nice confluence point established up here where I've got my corner. So I'm after that corner trade here. Since we're not, this isn't a golden corner, since we're not at the golden zone, but I'm right at the 786, classic B territory. I mean, would you have gotten all of that? Probably not. If you take it to the median line, that's only 78.50. Right, it's over almost $8,000 trade there. Now, could you have stayed with that through all of that time? I mean, granted, it's a 15-minute chart. Right, just the point being, this is an effective way to put together confluence points. So if I was in that now, having hit, and now we're moved here, well, look what I can do. I just go Alt P, and that's going to take off the median lines, and now I've got this channel. Now, sure, I've got some throw over here, but look how this seems to be kind of framing the market here. So rather nice. Now, additionally, let's focus on some of the other new tools here. So I'm going to leave this on here, and let's see if we can combine all of this together. Now, The latest addition is the Fib Time Projection. Now, there's a couple of different ways that you can use this tool. You can look for relationships between swing highs and swing highs to try and project where the next high might come. Same thing from low to low. Additionally, you can do it just like you would do an alternating price projection. You just take the pivot high here to the pivot low here to the pivot high here and project in time, looking for some sort of Fib relationship in time. So I'm just going to use this here and just grab this, and I'm just going to, it can be helpful to switch to your crosshairs here so you can get right on the pivot. So just for example, I'm going to get right on that, and I'm going to swing over right to this pivot high here, and once I click. Now if I double click, that's going to lock that in. Whoops, one click too many. That's going to give me, so I'm going to see the Fib ranges here going out in time, so I can see. So if I was curious about going here, let me take that back off because that can be a little annoying. Okay, so if we go from swing high to swing high, oh, come on, get off of there. I guess it's going to stay. Swing high to swing high. Now I'm looking for any kind of confluence points. Well, lo and behold, look what I get right way over here. Here's 1618, the length of that high to that high. Now sometimes, very often, you'll find it'll be a zone. So I get a zone here, just like you would if you were looking at price projection. Let me bring that down so you can see it. So the zone here between 1272 and 1382 would be an area of interest. With the low down here, looks like it just misses the 786, but this is of interest here. So I'm coming up, I'm getting the 1618. All I'm doing is taking this pivot to the next pivot high. Well, I might be curious about anything down here that would relate to a next pivot low, so I could do the same thing. I'm going to take that and I'm going to come down here where I'll be below it. I'm going to go from that swing to this swing here, and if I double click again, now that's going to project out here. So I'd be looking for any confluence points here for possible lows, right? These would be of interest, right? So once we get beyond, so we just one day now. These are 15 minutes, so we're just beyond the 618, and often they may not be to the tick. Often they will be. Right, so when you see them right on the tick, right? If you get 100 or a 1272 or on the pivot, that's just, it's not necessarily enough to take the trade by itself, but it's one more confluence point. So let's just keep looking here, see if we can find anything of interest that might relate. So I'd be curious to look at the relationships of 3 pivots here. So I'm going to just do the same thing again, and let's do. I think this will be better if I go below. So I'm going to go swing to swing to swing. Now if I put it right on this pivot, what's tricky up here is I've really got a double top. Let's start with the first one. So I've got really two pivots here that were within a couple of ticks. So there are times when you might just do a little testing between the two, see which one gets it best. Well, if I look at that just like I would an alternate price projection, well, lo and behold, look what I get here. There's exactly 200% on this low. Now here's my next low where I've got that's my next pivot here, so I don't have anything here. Here's 2618, here's 300%, 3618. Now I've got additional pulls here, so I'm out of space here, so I'd have to go to the 400, 4618. So from the A to the B, from this projecting. So now I'm looking for confluence points here. Now what you can do, now of course once they're there, you have some choices. So you could decide, okay, well, some of these aren't relevant here. What my suggestion, the way I use this, is I leave them on the chart because I don't know when they're likely to come into play again. So particularly on longer term analysis, I want to see when we get to these relative points if it can offer me additional confluence that's based on time. So trying to put all of this together, let's see what else we might look at here. Okay, so I've got this nice geometry here, granted the throw over, so you'd have a running parallel on this. Can I get that off? I want to get that off. Let's see, I think Control R, Control Q. Oh, it's not going to let me do it. Nope. No, I didn't mean to do that. Okay, so let's carry on here. So from this pivot to this pivot, I'd be curious about a retracement here since we're now back in the channel and we're bumping up on the edge of that channel. So from that, of course, we just use traditional. There's no need to be fancy here. We'll just use the built-in, of course, the Ninja retracement tool. Now I have it custom set to my preferences here. So if I can get on my low here. So again, swing high to swing low, right? It just as we talked about. Look what we've done right here, right? So all we've done is just come back to the golden zone. Right, you recall, right, as you've seen me say this before many times, the algorithm doesn't see the internal swing structure. All the algorithm sees is I've got to swing high, I've got to swing low. So we come back here, what do we get? Where are we finding resistance? Golden zone. Right, that should be of no surprise. Now here, so I'm at the golden zone. I've got the 1618 in time. This is of interest to anyone looking for confluence points for a potential short sale. Now, the other thing I'd be curious about is the swing from A to B projected from the C low down here. So I'd do the same thing here. I would take my tool here. These are just the built-in Ninja tools, and I'd project from down here. I get right on that low. It's a little hard to see. I've got this other one too. Let me zoom in there so I can get that. Be sure I'm right on that low, which I'm not. That gets you right on it. Okay, let me zoom back out now that I've got that on. All right, so here's the 1618 right here. All right, so this, I mean, essentially what you're looking at here is a lot of confluence that's right up here, suggesting that this is, well, you've got technical resistance here. So you could you could look at it from a couple of different points of view. So clearly, swing high, swing low coming to the golden zone should be an alert, right? Anyone who's followed any of my training would know that that's an area to be paying attention, right, for a potential reversal, or at the very least, just a potential trade. So we're out here looking at the 15 minutes. That looks like, oh, there's nothing there. Well, that's probably more than you realize. What do we got there? Well, there's $1,000, right? That's 100 ticks just coming off of this reaction up here, up at this reversal zone. Well, what else could we do? So remember, I mean, anything that I would want to do technically while I'm trading is built into the toolbar. So I'd be curious about what the volume profile looks like there. So I can just use the volume profile that's built in. So I can just go from this point. I want to get all of that low. I want to get all of that in there. Oh, this might take a second since we're not connected to data. Oh, not bad. Okay, so I can look at that. So through that entire swing down, well, look what's happening here. So let me get, this will work here. So as we've come back to the golden zone here, this might confuse you. Well, that's all right. So as we come back to the golden zone, look where we're starting. Look at the cursor to the left. Look where we're pivoting, right at this low volume node. All right, so you've got a little ledge right here. Looks like that's on the 65. If we come down just to this little low volume node right here. In fact, if I put a line on it, if I could do that right there. Okay, so look what we're doing. Come off of there. Okay, so I'm just highlighting that little low volume node, but how nice, right? So look what I've been able to do. So in here, I've got all of my internal fib tools, right? So I've got the retracements and the alternate price projections. I've got custom tools that will do the combination of those things together for me. I've got volume profile. I've got Elliott labels here. So if I wanted to try and label this, and I'm thinking, oh, there I've got an impulse here. Well, I can just knock it out, right? I can just, here's 1, 2, 3, 4, maybe that's 5 down here. So I think I've got an impulse, right? So I can label that up. Maybe this is the C wave of the ABC of the larger structure. Now we're correcting here. Now it looks like that could be another impulse. So 1, 2, 3, 4, 5. If you want to take the time to label, and of course, if you're trading on a tick chart and you're day trading, you probably wouldn't want to take the time because you're going to be changing it too often. But if you're out on a 15-minute chart, this can be really valuable. So you can do your analysis here. So I think I've got an ABC. I've got 5 coming down. Now what I get here? Do I have 3? No, it looks like more likely this is another impulse. So it looks like that could be an A wave before we go B, and perhaps we're going back to challenge some of these highs. But just looking at that, so I think the point I'm trying to make here, this is a very underappreciated tool. There is so much benefit here. The fact that I can do fib retracements, fib time, fib alternate price projections, volume profile, Elliott Wave, geometry. Again, everything that we teach at Trade Devils University is built into this single tool set, this toolbar. Right? Again, if I could only have one indicator, this would be it. Right? That's all I need. You don't need oscillators. You don't need anything else. Right? The foundation of the Trade Devils methodology. Fib relationships, looking for algos because they leave footprints, market geometry, and then some Elliott wave structure when it's there. And it's not always there. But in this case, as I look at this ABC, sure looks like it's there. All right, guys, that should give you plenty of ideas. Again, I encourage you to demo this if you're interested in how this could assist you in your trading. All of these tools are built in. You can click here. You can see all of the features. Again, my partner has done videos in each of these to show you, but these are all of the tools that are built into our toolbar. And of course, some of these you'll recognize as the native Ninja drawing tools, but then all of our custom tools are all down here on below. And there are more that I'm not covering here, which is why I would encourage you to do the 5-day demo if you're interested in a tool like this. I think you'll really appreciate it once you start trading with it. All right, guys, there you go. That should give you a few things to think about. Perhaps a demo is in your future. If you have questions or like more information about what we're doing, feel free to write us. We're very responsive. I hope that helps you. And with that, I'll sign off. You guys have a good day.